Hello everyone, how are you? I am Dr. Labib from this side, and from on behalf of Dr. Labib Academy, over a period of time, I am going to post the lectures, topics, recordings of modules, papers related to ACCA with the respective subjects F7 Financial Reporting, F8 Audit and Assurance, and SBR Strategic Business Reporting. Okay, and already I have posted few lectures, not few, a good group of lectures, a good number of lectures on my YouTube channel, and regarding the concepts of all three. Of late I started SBR Strategic Business Reporting, and Audit and Assurance, and Financial Reporting. Every till the examinations and after the examinations also, it will be a continuous process to promote this channel. For exclusively for the ACCA papers, and slowly I will add other modules, papers also, F9 Financial Management, and other professional level papers, skill level papers, especially skill level and professional level. And I request you to give your feedback in your comment section related to each lecture which has been posted. You like it, you subscribe it, and you share it. It has to give a message to the students community who are having a very good ambition to do the ACCA. This channel, Dr. Labib Academy, exclusively helps them with very quality, value-added, subject knowledgeable, both theoretical and application, as much as possible. Your feedback is very much essential, and very simply a humble request: like it, share it, and subscribe it. In this today, is right with us to we are in this session. We are talking in terms of what we are taking into consideration, the concept of financial reporting. Okay, financial reporting. Every session, one topic will be there: section A, section B, and section C. If I am working with section A, I will maximum I will cover 10 to 15 multiple choice questions. If I am covering section B, I will cover only one scenario, as simple as that. Okay, not more than one. And section C, I will cover the entire question. It will be a little bit lengthy. Usually section A and section B sessions will be for 30 to 40 minutes, and section C we have to complete it. Okay, so again I welcome you all, and in this new series of web posting on YouTube channel, I kindly request you to subscribe this channel, and your comments, your suggestions are highly appreciated. Thank you so much. Coming back to this financial reporting, is it? In financial reporting, what we'll do is we are going to cover one of the questions given in where given in March-June 2019. This is related to section B. Fine. This is related to section B, and this is related to IAS 10. Is that what the IAS 10 talks about? IAS 10 talks about events after the reporting period. Is it right? Events after the reporting period. Is it? Now, directly see the thing. Directly, I have already posted one or two lectures on related to this, but since we are starting this concept, before you go to the scenario, a quick recap. Okay, a quick recap about what we are concerned about IAS 10 as such. Is that I'm taking the same lecture which we have done. Is that IAS 2 events after the reporting period. First, you should understand what is reporting period. That's very important. Is that when we are preparing income statement, what is a income statement for the year ending 31st December 2019? Okay, we'll say statement of financial position as on, is that is statement as on 31st December. This 31st December is a reporting date and full year is a reporting period. Is it right? The full year is the reporting period, and this is what? This is the reporting date. This one, you should know what is the reporting period. Reporting period is the financial year where we are working. Now, what happens? There are so many issues, is it right? See what we have done in financial accounting. We have done additional information. Is that why additional information is there? Why we are given the additional information? The purpose of giving the additional information is that information came to the knowledge after 31st December. After 31st December, it came to our knowledge. Because it came to the knowledge, we have not taken into trial balance. Now we have to consider it. When you have to consider it, we have to consider it in both in the income statement and the balance. That is a brief flashback about that. Now, what is the events after the reporting period? After the reporting period is 31st December. In some countries, it is 31st March. In some countries, it is 30th September, 30th June. In normal cases, for our understanding, we will take 31st December as a reporting date, and one full year is a reporting period. Okay. Now, that is the first thing. Events after the report what are those events? Some events will be favorable, some events will be unfavorable. Favorable or unfavorable in terms of financial statements only. Okay, favorable and unfavorable events will be some events which you have to pay fines, something which has been destroyed in fire. The favorable influence, you will have claims. Is that you will have claims, insurance claims will be there. You have reported it before 31st December. Now you are going to get that claims. Is that? See what happens usually. See, now you have to be little bit specific. Is that you have a 31st December. Is that 31st December is the reporting date. Is it right? Now after this there will be this report has to be signed by the management. Is that you will have what you have the authorization date. Is authorized to issue. Is it right? Authorized to issue, but signed by you have the board of directors. All the things that process has to be completed. Then after that you will have a AGM. Understand this. You will be clear in the concept. You will be clear in the now. What happens the moment this is where the most critical part is this one. Is it the most critical part is now you are very active. Is it? We are very active. Whatever happens, is it? Assume 31st December, someday before till the date of authorization. It may be 30th April. It may be 30th April or before that. Is there any date? Any date before that. Now, whatever happens, that has to be considered. Is it? Once it has been authorized, it's done. Means We cannot do anything else, is it? At this stage, in this concept. IS 10 is a IS 10 talks about this. What are the favorable and unfavorable? Which occur between what? Which occur between the reporting date. What is the reporting date? Reporting date is 31st December. And the approved by the board of directors. Anything, any date before, is it at any date before 30th of April? Usually the date of unaudited accounts and audited accounts. Okay. 4 months period they will give. In normal situation generally, maybe it will be different in different countries, but we have taken that 30th April. That is why any date before 30th of April, whenever there is a approval by the board of directors, that is going to be the authorization date. This is where the concept lies. Now in this lecture we are going to make sure that how whatever happening here, it has to be taken into consideration. That is the first basic. Coming back to the next one. Yeah, coming back to the next one. What it says, there are two things. Is there two things that are very, very significant? Is that what are the adjusting events and what are the non-adjusting events? Is that what are the adjusting events and what are the adjusting events? What are the adjusting events? After the reporting date, that is the 31st of December, and that provides evidence of conditions existing and the reporting date. Means after the reporting date, but you should have the evidence that it has been happened as on 31st December, as on or before 31st December. Is that? It has to be very clear. 31st December is the cutoff date. Is that? Then we should make sure that what happens before this, on or before 31st December. And there should be a evidence of conditions. Then only it is an adjusting event. They gave you a very clear, simple, specific examples. What example they gave? They said that it is in terms of what? In terms of receivables. Is that? In terms of receivables. What happens when we take that into consideration? You will have receivables. Is that? You have receivables. What you will do? You will have provisions. Is that? Provision for bad and doubtful debts. Bad and doubtful debts. Yeah. Sometimes what will happen? Irrecoverable debts arising after. Say, you have to receive. Receivables will be how much? Receivables will be 1,000 reals. Is that? So receivables will be how much? $1,000. Is that? $1,000. Well, you are receiving $1,000, but what will happen? The one customer will say that I'm not going to pay it back, $1,500. Automatically, you have to make adjustment. But these receivables related to the past year. If that is the case, it is an adjusting event. Next one, you have the inventory, but what happens? The inventory becomes outdated, scrapped, damaged, lost by fire. It is right. It has been stolen. Anything happens, then you will say you have to write down the inventory. Then you have what is the rule of IAS 2? IAS 2 says that it should be lower the cost or net realizable value. Is that? IAS 2 talks about lower the cost or net realizable value. If that is the case, then we have to make it a adjusting event. Now, the third one, what it says, amount receivables in terms of what? Insurance claims. You have made a claim of insurance, but before 31st, but you will receive insurance claim. You are receiving insurance claim when you are receiving the insurance claim after 31st of December, but it is pertaining before the 31st of December. That has to be done in the adjusting event, and in simply any frauds and errors. Notice again the basic condition is it has to be I told you in the beginning, isn't it? It has to be between the reporting date and the date which has been authorized to approve. If these are the basic examples, if you go in detail, you will have so many other examples also. We'll discuss wherever it's possible. Non-adjusting events, it has been reported after the reporting date. Is it that condition that arose, that means that concern conditions, that means it will have impact after the reporting date, not before the reporting. Means something happens on 1st of January. Something, anything after 1st of January. Now, what are the things that has to be taken into consideration? Non-adjusting events. A major combination, business combination. You have any mergers, acquisitions, takeovers, sell-offs, is it right? Any announcements are there? Is it? We should not make an adjustment. Any destruction of major production plant by fire after reporting date. Reporting date is very important. Reporting date is what? Reporting date is 31st of December when you are preparing the financial statements. When you are preparing the financial statements, that is the reporting date. This is the brief recap about that. Next, any abnormally large changes in asset prices. Asset prices in terms of plant, property, plant and machinery, in terms of any assets, is that you have a revaluation is done, changes has been done. If that is the case, then definitely we are not supposed to go and see, it is a matching concept. Understand the point? It is a matching concept. After the reporting, matching concept is very clear. Matching the revenue with the expenses during the period. We should not have a mismatch between revenue and anything. And most importantly, what will happen? Foreign exchange rate. Foreign exchange rates changes on daily basis. Got what? Foreign exchange rates are changes on daily basis. If these are the things, then we should not make any changes as such. This is a simple snapshot of the concept which we are going to work it on. Got my point? That's the what is the IS10 and what are the adjusting events and what are the non-adjusting events. Coming back to this, is it? Coming back to the things where we have started. What is the scenario? What is the case? Now you will find it very easy also. Very easy. Jaffers prepare financial statements for the year ended. This is the reporting date. The financial statements are expected to be authorized. When it is going to be authorized? Now, initially I am writing 31st December. 31st December is what? 31st December is the reporting date. Fine. Next. And 15th March, is it right? 15th March is the authorization date by the directors. This is, then this we have to work out. The following events happens in the month of January. Something happens in between January. Is it right? Something happens in January. Now, slowly and steady. What it says, one by one. On each and every scenario, they will give you one question. They will give you 5 questions related to 5 different scenarios. One question is related to the concept, theory. One question with respect to application. One question with respect to the calculation. And one question is going to be an integration of all other things. Likewise, they will divide 5 questions. Okay. Plus, focusing on every point. Health and safety. What is the first scenario? Fine. What is the first? Health and safety. A health and safety investigation in an incident occurred in 2008 concluded this has been happened in this is the reporting period. This is the reporting period. It was concluded in 29. resulting of 1.5 fine for Jaffer. They have a fine of how much? They have a fine of 1.5 million. Already they have made a provision of how much? 1 million. Still they have to make a how much a provision? 0.5. Fine, we are not talking about that. Now, financial statements for the year 31st December 2000. This has happened last year. Is that this has happened last year? Before the reporting period. Is it? It has been, and still not authorized. It is not authorized. If it is not authorized, it is related to the things which are material. If that is the case, as per the rules of IAS 10, this is going to be a adjusting event. Fine. This is going to be an adjusting event. Next, what is the second one? Customer ceased trading. Customer has closed the business. Fine. Customer has closed the business. Notice was received in January 10th. 2009. Again, this one has to be very clear. When we are authorizing anything happened before 15th March, we have to be very careful. Received notice was received 10th of January. Customer owing 1.2. It is related to what? 2008, and ceased trading. It is unlikely that the debt will be recovered in full. You have received a notice. You have received it before it is approved by the financial statements are approved by the directors. Before it is approved by the directors, you got the things, and it is related to the accounting period. If that is the case, this is also an adjusting event. This is also an adjusting. Acquisition of the account, we have done anything acquisition, business combinations. Is there any business combination acquisitions? Straight away you know the things. The acquisition of a competitor was finalized when it has after reporting date. Is it right? After reporting date. Being the date Jaffer obtained control over the competitors. Negotiations in respect of acquisition commence. Fine. But it has been finalized after acquisition. It is a non-adjusting event. Very simple. It's not difficult at all. 1, 2, 3. Coming back to this next. In addition to this, there is an outstanding court case at 31st December relating to faulty goods supplied by outstanding. Still it is in process. Legal advice states that there is a small chance that they will have to pay. Fine. There is a estimation. Is right? This is only an estimated amount. Fine. This is only an estimated amount. This is fine. It is most likely outcome. Believe they how much they have to pay? 5 million. Either way. And they have to pay fees how much? 0.2. Means how much? They have to pay 5 million plus they have to pay 2 million as fees. Total how much to have to pay? They have to pay 5.2 as fees. 5.2 million. Fine. 5.2 million as fees. Now they are not paying right now. They are paying what? They are going to pay on 31st December. But they are estimating. Is that 31st December? Now you have to keep it aside. Fine. They are talking about what? That's good. They are talking about the discount factor also. Present value of money. See the thing. They are combining financial little bit. Time value of money. Time value of money. They are taking the means we have to take the discounted value. Yeah, we have to take the discounted value. Fine. Now they have given you 4 different different situations. 1, 2, 3, 4. Then this we have to understand. We have to be very clear. on these 4 questions, they will give on these 4 scenarios, they will give 4 questions straight away. Plus, they will give one conceptual question. Right? They will give one concept. Divide the things. It will make things easy. Now, Jaffer company believes that the fault lies with the supplier and pursuing counterclaim. Legal advice states that it is possible but not likely this action will be. See, is it all estimation, permutations and combinations, how it will happen, how it will not happen. Fine. Unless until the final decision is there, you should not carry forward. Fine. Which, if any of the following statements regarding IAS after reporting period is correct? As far as what it says, events after the report are deemed to be all the events from the date of financial statements are authorized. No. From where? From the reporting date, is it right? Reporting date till authorization date. It is not after authorization date. It is not. They say that I told you author there, and they will have a AGM. Yeah, this is what IAS 10 applies. Is it? This is where IAS 10 applies. Means the first statement is wrong. Non-adjusting events do not need to be reflected in any part of entity financial statements on annual report. Any event happened, but it is see, non-adjusting event means you should not adjust the event. Is it? You should not make the event part of the corrections. Yeah? We cannot make any changes, but we have to mention it. Is it right? That's very simple. This is also, they say that do not need to be reflected. No, it is not also applicable. The answer is what? The answer is neither one nor two. Okay? Now, we have done, is that? Still, we have written here we have written what are the adjusting events, what are the non-adjusting events. Yeah? The first one is adjusting, the second one is adjusting, the third one is non-adjusting. Select whether which of the following events which occur in January 2009 which will be classified or adjusting or non-adjusting events. Is that? I will say refer previous question. Is that? Previous question. Notes. Is that? Notes. The health and safety is a adjusting event. Customer cease trading is a adjusting event. Whereas acquisition by the competitors is a non-adjusting event. This is where I have mentioned here. Okay. This is where the reason why it is adjusting event and the reason why it is a non-adjusting event. Next. What they are asking? Select your answer. You have any doubts, any comments, any suggestions, just mention in the comment section. I will take that into consideration, and it will be beneficial for both us. Is that? Now coming back to this, whenever we are talking in terms of the things, select your answer for a pull down list provided. What amount should be recorded as a provision for outstanding court case against Jaffer's nearest 100 or thousands? How much they are saying they have mentioned here? Is it right? How much they are saying? They say that they most likely they will have to pay how much? They have to pay 6 million, and they believe that they will going to pay how much? 5 million with the fees of how much? 0.2. How much we have to keep it aside? Is it? Keep it. And this amount they are paying when? This amount they are paying on 31st of December with the discount factor also. Understand? Now the thing is, how much they have to likely to pay. Is that likely to pay is how much? Likely to pay is 5 million. Fine. Now fees is how much? Fees is going to be 0.2 million. Total amount is 5.2 million. This they are going to pay when? This they are going to pay on 31st December. Is it 31st December? What is the discounted value or the present value on 31st? Present value is it C divided by is it cash flow? Is it cash flow times discounted factor? Cash flow times discounted 5.2 million times 0.909. 5.2 times 0.909, it comes to 4.7268 or 4.7. Right? We are that's as simple as that. What is the likely to pay? What is the fees amount? And take the total, discount it with the discount factor, you will get the things. Okay, very simple, is it? Very easy also. At 31st December 2008, which of the following represents the correct accounting treatment of counter claim made by the counter claim? What is the note they have given for counter claim? Here they have given, see the thing. Jaffer believes that the fault lies with suppliers is pursuing counterclaim. Legal advice states that it is possible but not likely this action will succeed. They say that this action will not succeed. When this action is not succeed, there is no point of reflecting in the balanced financial statements. Is it right? We should not succeed. This is an assumption, is right? Nothing is recognized or disclosed in the financial statements. It is not a disclosure. We are not going to say it is a contingent asset. We are not going to say that it is going to be a receivable from the supplier. We are not going to say that net the possible counterclaim proceeds suppliers against the provision of claims. Nothing is going to succeed there. No, it will not going to happen. You will have assumptions, we can have that, but in reality, in the case, if it is not going to succeed, we should not go for extreme assumptions also. Answer is what? Nothing is recognized or disclosed in the financial statements. Are you clear about this? Good. In February, a major fire broke out in Jaffer's company property and warehouse. In February, when it is going to be signed, it is on 15th of March 2009. It has happened before that date. Jeffers have no insurance. That is really impossible to think. Okay, and now the management of the company believe that it's unable to continue trading. Definitely, there is no insurance is there. Automatically what will happen? It is going to be immediately. It is going to be a going concern issue. When it is not going to continue, it is going to be identified as a going. How should this be reflected in Jaffer's financial statements? No adjustment should be made in the figure. See, it is a going concern issue. We are not going to see where they have made it very. It believes it is unable to continue trading. It will cease to exist. Yeah, it will cease to exist. Unable. There is no adjustment. No adjustment should be made in the figures to the financial statement. However, this event must be disclosed. When we are not going to continue, and it has been not authorized. Still, that is the time. Definitely, it is a going concern. The financial statements can no longer be prepared on a going concern basis. Is that the keyword? Keyword is what? Keyword is a going concern issue as well. It says that no disclosure is required. However, this event must be reflected. We have to see if going concern keyword is there or not in the financial statements for the year end. Here also we are not discussing anything with respect to going concern. The financial statement should continue to prepare. No, to prepare using a, we are not, if we are not going to, they is unable to continue, how we can continue to prepare financial statements with the impairment loss recognized. Impairment is a different issue. It's a different topic against the we are not talking about only non-current assets. Is that we are talking about property, warehouse, the core element of the business, foundation of the business, property and warehouse. The fire was a major fire, and ultimately it impacted their core functioning of the business. Again, this is not the case. What is the answer? The answer is when we are not going to the financial statements, the financial statements can no longer be prepared on a going concern basis. This is where we are talking. Now you understand that when we want to do a scenario based question, the scenario based question should be based on the theoretical concept, and subsequently first, this is the way I will teach. Now I will take a concept first, I will give a brief explanation about the theory, and subsequently I will relate that theoretical concepts to the application and calculation part. It makes easy for us to understand and continue. Are you clear about this? Hope you have a value added session, and it will help you in the same way. Every time I will post in either section 1A, section B or section C. Just go through it, watch till the end, and make sure that you will like it, share it and subscribe it. And important thing is, any suggestions or any comments for improvement, is that I will take it very, very positively, and I want to continue this series so that the students community should be benefited and succeed. Best of luck.